Hello, Team 201. We're busy with a video series on the conceptual framework, and you know that the purpose of financial reporting is to provide useful information to the users of that financial information. And we've discussed that there may be many users of financial information, but the ones that we need to focus on when we're in the IFRS world is investors, lenders, and other creditors. Yes, there might be other users that are personally important to you, but we need to focus for IFRS reporting on the three parties: investors, lenders, and other creditors. Hopefully, when we provide information to these three parties, that will enable us to give information to other parties along the way, but that isn't our primary focus. And again, if you strongly feel there should be other stakeholders that we report to, then you need to take the opportunities offered to you by the IASB and commentary letters to them over time to mold financial reporting as we go forward to your view of the world. But that said, as the world stands at present, we're focusing on investors, lenders, and other creditors. A key assumption we make when we do financial reporting, apart from who we're reporting to, is going concern. Whenever we do anything in financial reporting, we want to make the assumption that the financial reports we're giving out are of an entity that is a going concern. What does that mean? Well, that means that this entity will carry on trading for the foreseeable future. So there's no sign that it'll be going to business rescue or insolvency in the near term. You might be wondering, why is that important? And the thing is, when you are no longer a going concern, the way you recognize and measure items in your financial statements might change significantly. For instance, if you have an item of property, plant, and equipment that you are holding for capital appreciation, a piece of land, a vacant land, for example, that vacant land may appreciate significantly in value over time, and that will influence the fair value that you report that land at present. However, if your business is going into liquidation in the near term, you may not be able to do a willing buyer, willing seller transaction to dispose of the property, and you might have to do a forced sale at an auction, for example. So that is why this is such an important consideration in financial reporting. You won't touch on it often when you learn more about IFRS, but remember that it is always the underlying assumption. We will be trading for the foreseeable future. So when we come back to making the decision now, you're sitting as a financial reporter and you want to report on an economic event. You're back at your blank page, you're thinking about the economic event and how to report on it. We already said the first thing you consider is who are you reporting to, and that would be the investors, lenders, and other creditors. So you want to provide information that is useful to those parties in making their decisions. And then the next assumption you're going to do is that your business will be trading for the foreseeable future as a going concern.